understand the problem of the economic crisis. And when you understand the problem, then you understand the solution. And the problem to the economic crisis is there are structural problems in both international and national trade. Okay. Structural problems. Now, sometimes we hear those structural problems in terms of balance of payments, current accounts. So between trade between nations, there might be a trade surplus or a trade deficit. This is not even related to that, and most people are not going to get the solution correct until they understand the problem. The problem is that in international trade, there are businesses that are set up, and their business model is that they sit in the middle, and they will make anywhere from 40 to 60% net profits. Their business model is cheap labor, and then they sell into the U.S. market, or they sell into the general market at higher prices. But they promote it as lower prices. And so what you have to understand is that when you have people who are making 40, 60 bucks a week, 80 bucks a week, and then a company will basically have no capital investments in the factory anymore. The company will slap a label on the product and ship it to the United States. They've turned into mainly a logistics and marketing company. But they're the ones making the 40 and 60% net profits. Now, this is what you have to understand, is that when there's too many people around the world that don't have enough money. So let's say, for example, if you and I want to go to work and sell our goods and services, how can you or I sell anything if the majority of the people are making 40 and 80 bucks a week? What are we going to sell them? So therein lies the problem, because there's not enough money circulating around. So again, it's in other parts of the world they'll call them middlemen, brokers, but they'll sit in the middle, and they have all sorts of means of sitting in the middle, all sorts of business models that sit in the middle to make 40 to 60% net profits. That is why we have the economic crisis. They are sometimes regional companies, and so we might call them oligopolies. Oligopoly is similar to a monopoly, where there's not enough businesses in that market to create competition, to have prices and wages come into line. So when there's no competition, oligopolies actually set the prices, and they're usually artificially higher. Think of it this way: when you go to the gas pump in the United States, and when gas prices are higher, you physically see that gas prices affect your wallet. But with an oligopoly, you don't see that taking of the money out of your pocket. It's an invisible cost. So you with me, okay, with the understanding of the problem, that there are companies who are making 40 to 60% net profits. They have cheap labor, and they sell into the United States or other markets at a much higher price. And because they have such large market share, they take too much liquidity, too much circulating money out of the economy, so that at some point you and I cannot go to work and sell our goods and services because there's nobody around to buy our goods and services. Is he okay with that?
Okay, yeah.
Okay. So let's talk about the solution then. Okay, before I talk about the solution, I want to say one thing, because it's important in understanding the problem and also understanding the solution. Back in 1971, under the Nixon administration, there's an independent government agency that was established called Overseas Private Investment Corporation, OPIC, Overseas Private Investment Corporation. And what they do is they lend money to both U.S. and foreign investors in joint ventures to build factories overseas. You can go online, you can Google it, OPIC, and you can read all about them. And we didn't know, I found out about them when I had a phone conversation with them. And they all sound nice and fancy on the website, but when you talk to them on the phone, you know exactly what they're doing. They're helping build factories overseas to send U.S. jobs overseas with cheap labor. So our government has had a hand in this since 1971. Exactly. So we need that's the part we need to understand. So let's go to the solution now. All right. So if you want the middle class back, if you want the economy to grow again, you introduce competition.